Hello, I'm Tim Beggins, president of Elk Trading Company. In today's article, natural gas and LNG, this week's main drivers and the look ahead. In today's article, we've got an image from the Institute for Energy Economics and Financial Analysis showing the Middle East crisis is deepening Europe's reliance on U.S. LNG. This week's main drivers. Natural gas markets continued grinding higher this week as improving LNG demand, lower U.S. production, and growing global weather risks help offset still comfortable storage levels. The EIA storage report came in at plus 85 BCF, directly in line with expectations. While neutral versus the 5-year average of plus 84 BCF, the build was notably tighter than last year's plus 109 BCF injection, reinforcing the idea that market is gradually tightening despite shoulder season conditions. LNG fundamentals also improved. Maintenance at Corpus Christi LNG is nearing completion, while Cameron LNG and Calcasieu Pass continue returning toward stronger utilization levels. Golden Pass LNG feed gas demand remains uneven as Train 1 progresses toward full operations. But traders continue viewing the project as a major structural demand source later this year. The HLC Eagle LNG tanker's unexpected turn toward Asia highlights the ongoing premium risk in Pacific markets. Japan is now forecasting a potentially hotter summer than 2023, while India faces intensifying heat and drought concerns tied to strengthening El Nino conditions. NOAA now places the probability of El Nino persisting into winter above 95%, increasing concerns about both cooling demand this summer and potential global weather disruptions later this year. In the U.S., rising heat risk across the Northeast is beginning to support stronger power burn expectations. Data center expansion, AI-driven electricity demand, and ongoing coal retirements continue strengthening the long-term gas demand outlook. NGSA's newly released summer 2026 outlook projects total U.S. natural gas demand will rise by 6.4 BCF per day this summer, driven primarily by LNG exports, power generation, and industrial growth. Globally, geopolitical risk remains elevated. The Iran war ceasefire continues to look fragile, keeping energy traders focused on Middle East supply security. Meanwhile, ADNOC Gas reported progress restoring operations at the massive Habsin gas processing complex after recent disruptions. The look ahead. Heading into next week, markets will closely monitor U.S. production trends, LNG feed gas recovery, and evolving weather forecasts. The combination of hotter Northeast temperatures, strengthening Asian cooling demand, and improving LNG utilization could continue tightening balances. Traders will also watch whether Asian LNG premiums pull additional Atlantic Basin cargoes eastward. Longer term, Europe's dependence on U.S. LNG continues growing. The IEEFA now projects European countries could source 80% of LNG imports from the United States by 2028, reinforcing the strategic role of U.S. export capacity in global energy security. India's reported push for a direct Gulf deep sea gas pipeline further highlights how nations are accelerating efforts to secure long-term natural gas supply amid rising demand and geopolitical uncertainty. You can learn more on the links we've included in the article. Please let us know your thoughts in the comments section below and hit that like and subscribe button. Thanks for listening. We'll see you soon.